Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the Forex market, and today is time to recall our setup on the Great British Pound that we discussed a couple of weeks ago. But since, well, here was no positive performance on last week, no patterns have been formed, we just turned back to the euro currency. But now it's again seems valid, and it makes sense to consider the setup that we talked about earlier. I'm speaking about the possible brand body sell on the daily Great British Pound. So currently, recent upward rally, as you can see, it's mostly supported by the big expectations among the investors on easing on the inflation. So really big hopes on the market stand the CPI numbers today will show at least a stabilization or even maybe softer data compared to the expectations, which will provide some maybe gentle hopes on soft landing in the United States economy or something of that sort. Those of you who read our reports and should understand that it's absolutely not the case. It's just impossible. But investors are treating our overall situation in very common issues such as inflation, interest rates, recession. So if inflation is dropping and interest rates is rising, it means that it's taken under the control, which means that, well, in general, recession might be, but as inflation is still dropping, it means that Fed could be not as hawkish as it stands right now, which is decrease the pressure on the economy, since interest rates will rise, but not as fast as before, which provides some hopes that maybe they will try to avoid and escape the recession. This is common logic that stands on the market currently. It's really difficult to talk about any forecast for today, just because in this case we have to predict the CPI numbers. We expect that CPI should decrease slightly by this in September. Maybe, as we discussed in the report as well, maybe in August, this report that we get today also will have some part of this effect. It's just because, as you know, the United States was able to decrease a bit gasoline prices inside the country. Gas prices are not as high as in Europe, in the United States. So in general, this energy component of the CPI could go down a bit. But since it has really big value in the structure of the CPI numbers, because the energy inflation stands very high, so that could make some easing effect on the CPI in general. So we will see. Speaking on the technical side, you could see that we have the brand body in place actually. So free close above the 3x3, market hits the 30% resistance of the thrust, and actually this is confidence level. So this is a potential background for a taking scalp short position. Minimum target will be the 618 support of this upward action, but potentially this situation could lead for a further drop if, for example, CPI will not be as weak as market expects, or maybe some other reasons. On the 4-hour time frame chart, take a look what we have. Currently, we probably can't speak about the hand shoulders that we discussed previously, but it should be treated more like some kind of the double bottom. Here we have specific for the double bottom a special feature that shows very often a kind of the wash and rinse, because take a look, it was in the shape of the engulfing pattern, which suggests it was fast drop, grabbing stops below the A point and fast return. This is type of the wash and rinse action, and that tells us that it might be treated as a kind of the double bottom. So target of the double bottom is usually estimated by either extension A, B, C, taking 2 multiplier here. So you take the AB distance and take it twice from the C point. It's kind of the double OP. Or classic approach is just a calculation of the distance between the neckline to the bottom, counting in the points of the breakout, approximately you get the target. So they very often, as in the case of the hand shoulders, very often coincides, agrees with each other. And here we have very small distance. So here's we have 1740 and here's 1778. So mostly they stand very close. Both targets, as you could see, agrees with the confluence, stands slightly above it. So if you would like to take the short position here, you have to place stop somewhere above the second target, highest target here. On the hourly chart, the ABCD pattern that we have right on the bottom is already done. This market hits the XOP here, and here, as you can see, kind of the type of action that is reminds it also Russian rinse and so on. So here's market stands in a very tricky moment. So theoretically, it has to complete the targets that we have here, but it is very unstable in such a moments, especially when it's roaring around confluence and an expectation of the important statistics. So here, in general, it would be nice if we get here good bearish reversal pattern. So I suggest that it would be better trying to wait for some signs of the reversal. For example, if market starts to form the head and shoulders, that will be something. But I suspect that since the reaction on the data will be probably fast, it could happen that it will be driven directly by the data, and pattern might be not have enough time to be formed. So that's also could happen. Currently, market has formed here is minor butterfly, as you can see, but with this butterfly, market completes the XOP, but it's not enough to complete the targets that we have here. So just keep watching what will happen. This is in general the area where you have to make the decision on whether you would like to take position or not. So that's what we have on Great British Pound. On the euro currency is very similar situation based on the recent market euphoria and wild expectation of the moments that I have talked about in the beginning of the video. You could see that here market has broken through the consolidation that we discussed. But in general, it is coiling around the same confluence area without breakout. So as a Great British Pound stands at the confluence, as euro currency stands at the confluence. On the 4-hour time frame chart, once again, this is not the head and shoulders that we thought initially. As you can see here, we suggested possible taking the short position for a drop down for scalp trading. For the bullish trade, we consider this kind of the head and shoulders that we suggested. But once again, here's the same as on the cable. A kind of the double bottom, but not as evident signs of the Russian rinse at the bottom. This is just more extended action. And potentially it also could keep chances on the possible higher upward direction. But at the same time, on the hourly chart, market also reacts on the same XOP that we have on the cable as well, without any Russian rinses. It just dropped. Here's forming some minor grubbers appearing. Since we are expecting, or at least the bearish pattern is forming on the cable, it's logical to consider the same setup on the euro currency. So here's as well, you probably could try to watch for some patterns, maybe got a triple to sell here, it might be formed based on the grubbers placing stop above this area. Maybe you already have taken the short position right there because we have the XOP agreement with the daily confluence. But once again, we're dealing with the risk of the data release, which brings a lot of uncertainty. The technical picture, stands as we just have discussed. So let's see how it will go.